ShapeShift is a service that exchanges one crypto digital asset for another. They do this without collecting any personal data on their customers, and they do this without ever collecting the customer funds and putting them into their company account. But when the Securities and Exchange Commission took the position that the now defunct Ethereum ERC20 DAO token would have been considered an investment contract security, the SEC also emphasized that it may be considering other digital tokens to be securities as well, based on their specific properties. The resulting situation is today's announcement from ShapeShift, and that they may need to deactivate some of the digital tokens on their network for all of the users in the United States. So, what kind of digital assets are going to be affected for people in the United States? What is the lens of the Howey test? And why are Americans with American IP addresses allowed to participate? Let's discuss. Hey everybody, I'm Gary Palmer Jr., you're you, and together, welcome to Minting Coins. Super excited to be here, super excited that you're able to join us with this video today. There's a lot of excitement going on in the world, and there's just no shortage of things to talk about. Before we get into the market and get into the news, I just wanted to real quickly say thank you for showing up. Thank you for tapping that like button. Thank you for subscribing if you haven't already. And be sure to check out the show notes below for awesome links that we're going to be going over, and all sorts of other information about minting coins, and information if you're interested about what we have going on. So in today's world, in the market, we have Bitcoin Cash going through the roof. We have all sorts of announcements coming out. We have implications rippling through the industry from the SEC decision just a few weeks ago. And people are just really wondering what in the world is going on. And so, yeah, there's just a lot to talk about, a lot to go over. People have been giving really great comments about the show, really great feedback about the show and the information that we're bringing to you. And you know, with that being said, if there's any questions you have as we're talking about the information inside the video, just feel free to pop those in the comments below, and just get your question out as we move along through the video and through the discussion. So with that being said, let's jump into the market and then dive into the news, and then let's discuss. Okay, so here we are starting over at coinmarketcap.com, taking a look at where we are in the the universe of digital assets and cryptocurrency. And so we see that we have 850 currencies, current market cap still in the same sort of position that it was yesterday, around $142 billion. We have a significant boost in trading today. We see we have $8.8 billion in trading, more than I ever recall seeing before. It's just a huge amount. And with a lot of this trading, if we scroll down a little bit, we see that this has mainly been coming from $2.9 billion has been traded in the past 24 hours in Bitcoin BTC, and we've had $3.1 billion traded in Bitcoin Cash. The net effect of that is that the Bitcoin dominance, because of all the additional money into the space, and well, we just said it's not that much in terms of additional money. And so where that money has come from, yesterday that money was additional, because it was in addition to the market cap, but today with the market cap being the same, this money from Bitcoin into Bitcoin Cash, this increase of 49% in the past 24 hours, is coming mainly from Bitcoin. It just correlates with the amount of money that we have in a drop of Bitcoin. You know, about what is it, about $4 or $5 billion, $3 or $4 billion. We have $3 and $4 billion into Bitcoin Cash and down from Bitcoin. And so it's about 3 billion here, about 3 billion here, about 6 billion in total being traded around. And yeah, so we have this Bitcoin coin down for almost 5.5%, 4.5%, still above $4,000, $4,100. But the real story that everyone is just talking about is the massive spike in Bitcoin Cash. It's creating a lot of questions. It's creating a lot of confusion. Why is this happening? What is going on? And let me just say that nobody knows. Maybe some people know. I mean, a combination of the people that are spending the majority of the $3 billion going into Bitcoin Cash know what's going on, but none of us really know what is going on. And so my information for you is that, there's a lot of people out there that have huge concerns around Bitcoin Cash. And the reason they have huge concerns around Bitcoin Cash is because this larger block size, as the thinking goes, the larger block size is making it so only larger miners can mine Bitcoin Cash, which is reducing the number of independent nodes that are operating with Bitcoin Cash. And that with some other technical issues with the original Bitcoin code, they're saying that the larger block size is just going to help push Bitcoin toward the world of centralization. On the other hand, though, there's Bitcoin BTC, and Bitcoin BTC it now has SegWit implemented. With SegWit implemented, we can initiate the Lightning Network on Bitcoin BTC. The Lightning Network is coded and developed by a combination of decentralized developers around the world, Bitcoin Core developers, and Blockstream developers, as I understand it. So Blockstream is a company. Blockstream is, a centralized company based out of San Francisco with all sorts of investors from companies all across the space. We talked about that a little bit yesterday, I believe. And so with what Blockstream is doing, with Lightning Network is doing, the Bitcoin Cash people are saying that in itself is centralization because they have centralized the code. They're centralizing the second layer protocol of Bitcoin, which is the sidechain business. And the way these sidechains work, it has a network effect sort of principle. So it doesn't matter if it's with Ethereum or with Bitcoin, whichever sidechain gets the greatest adoption, gets the greatest usage for that particular blockchain, it's going to be more likely that sidechain is what becomes the dominant chain for that blockchain. And so in the case of Bitcoin, the Lightning Network technology is the sidechain based technology, of which would give, if that is the sidechain that gets mass adoption for Bitcoin, BTC, which has SegWit, then that's going to give Blockstream a huge advantage since they may own some patents around that technology and whatnot. And so because of that, the Bitcoin Cash people are arguing against Bitcoin BTC, SegWit, and Lightning Network, and the Bitcoin BTC core people, they are arguing against Bitcoin Cash because of the increased block size and the way that creates centralization, and also that the Bitcoin Cash really has a limited voice, a minority of the network, as we saw, with the activation August 1st. And yeah, it's just a lot of FUD going back and forth in both directions. And what's going on today is that Bitcoin Cash is shooting up. People see it shooting up. They don't want to miss the train. They have a fear of missing out. And so they're throwing their Bitcoin to chase this this rising this rising roller coaster over here. And yeah, so that's kind of risky. I think it's kind of risky. I don't ever recommend personally for myself, my own personal philosophy is to not buy, is to either hold or to sell when the prices are going up, and then to buy when the prices are going down. So if everyone is super excited, like right now is a perfect example with Bitcoin Cash going up 49%, I would really, if I was interested in purchasing Bitcoin Cash right now, I would wait until this was on a trend down, not the trend up. And so all the people that were saying bad things about Bitcoin Cash and just talking all sorts of smack about Bitcoin Cash when no one was talking about it, when the price was down and stable down. If we go to our Bitcoin prices over here, we've been watching these prices very closely, and so right now the Bitcoin Cash in terms of Bitcoin is 0.17 BTC. We have been watching this before yesterday, the day before yesterday, and those days before. The Bitcoin Cash price was practically equal to the Ethereum price at 0.068, 0.069, 0.07. And now it's but now the Bitcoin Cash has jumped, right? So I guess you could say the same thing is true with Ethereum. The Ethereum price has been so stable at the 0.07, and we know Ethereum only has one direction to go. As soon as they release an announcement about Ethereum, then we can expect to see this Ethereum price go the way of Bitcoin Cash, and this Ethereum price could just as easily, in my eyes, go from $300 to $600 just as easily as Bitcoin Cash, just as easily as Bitcoin Cash went from $300 to $700, just as easily as Bitcoin BTC has gone from $3,500 to $4,400. We could see the same thing with Bitcoin. So overall, the point that I'm trying to get across is that when everything is going straight up, it's probably not the best time to buy, and because it's going to hit a top, it's going to fall back down. It's just risky business, right? So hold or buy when consider hold or buying when it's going down, and consider selling or holding when it's going up. Generally at a high level. So part of the additional problem of what we have going on, these huge issues with Bitcoin, is that if we wanted to destroy Bitcoin, if we were the one world government and we wanted to get rid of Bitcoin to the greatest effect that we could make, we would create a divide and conquer strategy. We would try to create multiple fractions of the Bitcoin community. We would try to split the Bitcoin network as much as we can, as many times as possible. And that is the exact situation that we're in. We have the community fractured. We have some people saying Bitcoin, some people saying Bitcoin Cash, some people saying neither one. And now in as early as November, we have the 2x bit of the SegWit 2x, which we talked about a couple weeks ago, coming up. And that is still going to happen. They agreed to it. We talked about here in this channel that it's absolutely going to happen, even if there's only, say one miner that makes it happen. And even if all the current miners don't want it to happen, then a Bitcoin Cash miner is just going to switch mining to mine this just to force the situation, because the more Bitcoins that there are, first of all, if you already have Bitcoin, the more money that you're going to make. But second of all, if you're trying to bet on a particular network or destroy all the networks, then dividing and conquering these different networks, fragmenting all of them. So instead of having one super strong Bitcoin, you have 3 weakened Bitcoins. It just creates a much better advantage for everything and everyone else. It doesn't matter if you're talking about the centralized banks of the world, or if you're talking about Bitcoin's #1 competitor, which is Ethereum. Having 3 different Bitcoins, having the Bitcoins scattered and fragmented across on the rubble, creates huge opportunity for Ethereum and all of the companies that have something, an interest with Ethereum. If you want Ethereum to win, if you have big bets in Ethereum, then you would want the Bitcoin market to be as fragmented as possible to give that Bitcoin that great advantage. Okay, cool. So before we jump into the news, just wanted to go over this information that we went over yesterday. If you have a Trezor hardware wallet, Trezor hardware wallet, or a Ledger Nano S, or a KeepKey wallet, you want to make sure that your firmware is updated and updated relatively consistently. But it's especially important right now for Trezor, and I believe one of the other hardware wallets too is having this problem, although it hasn't been publicized quite as much. But the Trezor is definitely has this firmware update that's critical for a definite hack of the physical device if you lost access to your physical device. The original blog post that came out about this, saying that the Trezor is doomed, wasn't 100% accurate. And if you want to fix this vulnerability, then you simply need to go to your Trezor wallet online, plug in your Trezor, update your firmware, and then you'll be golden once again. But security is very, very difficult. And so one more note before we get into the news. I just wanted to make note of this. So this is like a good news, bad news situation. So, where do we start here? So let's start with the second line. The promotion of white nationalism and hate groups is horrible. Hate groups are horrible. Nazis are bad. Racism is bad. It's like we're all in this together. If we're either all gonna win together, we're all gonna reach the moon together, or we're all gonna explode in the sky at the same time. And so we really need to stick together, and we need to come together, and we need to create dialogue, and we need to be really tolerant of each other, except in the face of intolerance. And intolerance is the one thing that I am intolerant over, and it has no room whatsoever in this world. So with that being said, what's interesting about this article in terms of the world of cryptocurrency is that we have Apple blocking Apple Pay support on these websites of which they don't want to support anymore. And so in this case, sure, we're saying that hate groups and white nationalism and Nazis and the KKK are bad, and there's no place for them and for their goals in the society of 2017, or the society of 2020, right? When that's really where a lot of our minds are focused on. But at the same time, just like that, Apple Pay can stop promoting their websites. Apple Pay can just shut off the funding for their websites. And my only question, with this is, where is the line from Apple Pay blocking one website to, 10 years down the line when Apple Pay can block another website, which could be totally legitimate. And it's always really interesting with some of these movies and some of these thought experiments is that who are the ones that get to make the decisions with this centralized authority. And so just information to think about. All right. So turning into today's news today, we're starting over at the ShapeShift blog over at info.shapeshift.io. And they released this blog post just today about ShapeShift and tokens, talking about some of the tokens that may be seen as securities. So according to the ShapeShift blog, their perspective on it, at their most fundamental level, tokens are speech. Tokens are messages that are communicated and distributed using a blockchain, which is peer-to-peer transaction, peer-to-peer trust of sending these cryptographic messages between you and another person and having it distributed across the world. And so the distribution of that information across the world is just creating this free speech environment where people can say what they want to do without the risk of being censored. In the case of Bitcoin, then Bitcoin, that secure message is also money. But there could be other instances where the secure message does not represent money, but it's still a secure cryptographic message on a blockchain, peer-to-peer between two people across the world. So specific ledger entries have become defined in addition to just this, though. If that was as simple as it was, then this would be a very, very simple world. But different people have different agendas, and the way that society is set up is that it's structured with these different levels of laws and rules and regulations, however we want to define those. And in the minutia of all of that precedent, there are definitions, and these definitions have been developed and just enhanced and evolved and modified through legislation and court decisions and I suppose executive orders and whatnot, all sorts of rules. And most recently, as a lot of people are aware of, the SEC, which is the Securities and Exchange Commission in the United States, it's a regulator of finance, took the position that the Dow token, which was an ERC20 token, like we're pretty familiar with a lot of these ERC20 tokens, this Dow would have been considered a security. It would have been considered a type of investment contract that has been already defined as early as the U.S. Securities Act in 1933. And so now that the SEC has ruled on this definition and has said very clearly that the DAO would be a security and other coins like it would be defined as a security, that places these cryptographic tokens, these digital assets, into special classifications with certain jurisdictions in the whole United States. And so what that means now is that if something is a security, then it's your ability to buy it, to sell it, to partake in the exchange of that market is severely limited. Originally they're saying it's for your protection, so you don't get swindled by some shady investors trying to sell you bad stock in a bad company. But what's come about it is that only the richest people, accredited investors, are able to participate in these huge opportunities that are happening in the world. And these huge opportunities which have come about again in the form of cryptocurrency. And so with this decision about the DAO token, the SEC has also emphasized that it may consider other tokens to be securities as well, based on the specific properties of the tokens, but also based on the ways in which the issuing organization is defining these tokens, is distributing these tokens, the way these defining organizations are originally set up themselves. And so there's different ways that the security is defined as a security. So it's based on the properties of the token itself and the properties of the issuing organization that initially creates it. So with ShapeShift from its beginning has been an awesome company. This is one of the companies that I've been following the longest, and it's been one of the most interesting because of its ability to be relatively safe, relatively fast, and relatively private in terms of not requiring users' information. And so where we're at now is that in light of the SEC statements, ShapeShift is letting us know that they may need to halt their inscriptions of the shape-shifting ability with certain blockchains. And specifically this means that they may need to deactivate some of these tokens from the platform, and not from everybody, of course, just the people who aren't allowed to participate, which is currently people in America. But this hasn't been, to my knowledge at this current moment, this hasn't been enacted quite yet. Where we're at currently, this was just released earlier today, is that ShapeShift has instructed their counsel to examine the tokens, the different tokens that are already existing, that are already integrated with the ShapeShift technology, and to apply the lens of the Howey test. And so taking all the tokens and then applying the lens of the Howey test, which are principles which can be used to be determined if a security is a security or if it is actually not a security at all. And so as this analysis is done, that's when they're going to figure out if the token is being defined as a security by their lawyers, and if it is, then it's going to be removed from ShapeShift for the people inside the United States, for the Americans that are using ShapeShift with an American IP address. Yes, and if you don't have an American IP address, and I would suppose it would still work. Like say you're an American, but you're just using a VPN, and it was saying that you're in Canada or somewhere, then maybe it would work. I'm not exactly sure. So yeah, and so the people in the United States wouldn't be able to use ShapeShift, and if they were able to use ShapeShift, then they would have to give up some of their transparency or some of their privacy and have their personal information silently be sent to unknown organizations about their usage of the ShapeShift program software. Right, and so doesn't seem to be a really fun situation for us to be losing such an important service across the country, especially for so many of these coins. A lot of these coins, I know people aren't exactly sure which of these coins we're going to gain and which of these coins we're going to lose. ShapeShift does link to this CoinDesk article, and this CoinDesk article, we're not going to go into this right now, but it's a 3-part article that talks about the SEC laws and securities laws and doing ICOs the right way. And with this, you know, I'm just going to link this so you'll be able to go over this information to get a better sense of what the Howey test is and what a token has to do in order to not be seen as a security. And so that's going to be this article right here in case you wanted to get more information. Again, this is a multi-part series with parts 1, 2, and 3 as a basic primer on the state of U.S. law as it applies to app coins and ICOs. So a little bit about ShapeShift, just so we can dive into ShapeShift and know who this company is, and you know, because it's always interesting to see how these different companies fit into the ecosystems as their names come up in the news. So ShapeShift right here, I know it was originally founded by Eric Voorhees, and ShapeShift is a company that does not collect personal data on its customers and exchanges one cryptocurrency for another without collecting the customer funds in their account. And that really makes it unique among these different companies because they're not collecting any of the information on you. When you open up a Bitcoin wallet, a Bitcoin address, it doesn't ask you any information. It just creates an address and there you are. You have access to your private keys. Once you have Bitcoin, you can send that Bitcoin. And the same thing with ShapeShift. In order to shapeshift from one coin to another coin, it doesn't care who you are. It just sends one token from another token, but obviously now this is different. Now, it still doesn't care who you are as long as you're not an American. And if you are an American, it probably won't care who you are if you're not trading a coin that's being defined as a security by the lawyers of ShapeShift, which, you know, they're definitely going to err on the side of caution. And so let's learn more about ShapeShift. ShapeShift was founded in 2013 in Switzerland, and in March 2015, it actually received $525,000, over $500,000 in seed stage investment by some people. You might have heard these names. They received investment money from Roger Ver, from Barry Silbert, and then additional funding totaling $1.6 million had also been provided by September 2015 from investors and second funding rounds, including the Digital Currency Group. We talked about the Digital Currency Group before. Digital Currency Group owns and or has investments in Coindesk.com, Coinbase.com, GBTC, the ETF fund for accredited investors. And so Digital Currency Group also has investments in ShapeShift. So it's just a lot that the Digital Currency Group has themselves invested into. It seems as if the Digital Currency Group is really the main pin that's connected to all these different companies. And then what's really interesting is that we know that the Digital Currency Group is, I believe, owned by Second Market. We went over this before. Owned by Second Market right here, that's right. And then Second Market is parent company is NASDAQ. So NASDAQ owns NASDAQ owns a company, NASDAQ Incorporated owns a company called the NASDAQ Private Market. The NASDAQ Private Market was the former name to Second Market Inc. And Second Market Inc. and the NASDAQ's Second Market is what owns the Digital Currency Group. And Digital Currency Group is what has ownership or investments in all these different companies like Coinbase, CoinDesk, and ShapeShift here. Bitfinex, also Bitcoin Capital, Mardell Investments, all investing into ShapeShift. Then over here we have ShapeShift over at Coinbase.com. You see that they have one acquisition, 12.79 million through 4 rounds, 13 investors. Just great information at Crunchbase, where you can get this information. You can see, you know, who invested when between Bitfinex and Digital Currency Group in a Series A seed. Eric Voorhees, of course, investing in their own company. Roger Ver. All this different information. You guys can get all this. It's going to be linked in the notes below. So I'm not sure. What do you think about this? Is this just more regulation, crunching down, just removing people's rights, their ability to participate in this new world? Or is this regulation really protecting people from losing money and losing their shirts in unregulated securities? There's the SALT ICO. It's probably closed by now, which is also by being led from the advisor. One of the main advisors that's leading it is Eric Voorhees, who owns and runs ShapeShift. And the SALT ICO, just so you know, is an example of an ICO that is the first ICO to be allowed for Americans and for Americans who are not accredited investors. And so they're already working on understanding exactly how to create tokens which are going to be able to pass this whole test with the SEC. There might be more rules and more things that a company has to do. You might need more capital to start your ICO, more runway, so you don't need to rely on the funding of the ICO itself to fund your group. But with the rules that have come out by the SEC, this is really going to facilitate an explosion in new ICOs coming out into the space. A lot of people think that the rules from the SEC is going to clamp down and restrict the number of new ICOs. It's quite the opposite. The rules don't tell people what they can't do. I mean, normal people see the rules and they read what you can't do, but an entrepreneur, a business owner, someone that wants to get things done, they're going to read the rules, and reading the rules is going to tell them exactly what they can do. They're just going to read the negative and then figure out how to double negative that into a way forward, right? And the lawyers are going to help them do that. The lawyers will help them get this done, and what will happen is, the barrier to entry to get into a position where you can start your own ICO is just going to be much harder. You're not just going to be able to, get away with writing a white paper, making a pretty website, and then launching. It's going to be a few more loopholes than that, especially if you want to, reach the American market, which I think is a pretty important market overall, right? We're definitely a significant portion of the world, and people in America want to participate in the ICOs. When is America going to get past this confusion or this uncertainty about what's going on, and is going to allow people and companies in this country to really participate? So frustrating. Anyway, so this is really interesting. Do you guys use ShapeShift? What do you think about ShapeShift? Which tokens are you most sort of concerned about losing access to? And with these tokens that we might lose access to, are you considering purchasing those tokens and getting those tokens now as soon as possible before it's impossible for you to get your hands on those? Really interesting stuff. Let me know what you think in the comments below. Thanks for showing up. Tap that like button if you enjoyed this video. I really appreciate it. It really helps this channel. It really helps keep us motivated, keep us going. Give your thoughts in the comments below. Visit us on Steemit. We're starting to check out DTube as well to see about incorporating these videos into DTube and Steemit and wherever else we can get our videos out to. If you have any ideas about how we can grow and how we can expand, I'd love to know what do you think. And just really incorporate your feedback as much as we can inside the channel, because our success is your success, and we really want to all come together, and we want to really have success together, not just with ourselves, not just with our friends, but also with all the different people who disagree with us, all the different people who argue with us, all the different people who may not understand exactly what is going on. We're in this together, and I'm glad that we are together, because together we're minting coins.